Hello guys, welcome back again to my YouTube channel. So in today's video I'm just going to be showing you guys the A plus model and how to actually pick the best trade profitable trading setup. Okay, so welcome back to Like Mind FX, the home of profitable trading. So we do our best to actually simplify trading for you. And today, guys, I'm just going to be giving you a deep insight into Euro USD and gold and how to actually use this model. So the first thing you have to do is you should try to understand the model. So understanding the model makes everything simple for you. All right. So this model I'm going to be giving you is actually used by the top traders in the industry to actually make big wins in the market. So right now, the first thing you do is for you to actually identify the trend of the market. So you identify your swing points. So right here we have our swing low and we have our swing high. So basically what you can clearly see here is when you want an uptrending market. So since this is an uptrending market, you're actually trying to till this market gets to this high, till this market grabs the liquidity at that area, you continue to buy. Okay, you don't look for sales, you just continue to look for buys until that liquidity, the upside liquidity, the external liquidity there is actually what swept. So we have our external liquidity and we have our external liquidity above, we have our swing low and we have our swing high. So we have external liquidity above the swing high and the swing low. So there's liquidity resting above that area and below this area. So until the market actually sweeps the liquidity above that area, it's still bullish. Okay, so now that the market has actually swept that liquidity, then it becomes bearish. So now I'm just going to show you guys a little example on how to actually follow the trend. Okay, following the trend using a simple trading strategy to actually follow the trend and then take your buys to that target. All right, how to actually do it, the step-by-step process for you to use for you to actually get those good win to reward ratio. And mind you guys, you don't have to trade many pairs for it to be profitable. You can just trade 2 pairs or 3 pairs at most and be a profitable trader. So now let's look at Euro USD. So from the already the price has actually what delivered. So from the, we're just going to scale down to the 1 hour time frame now, and I'm going to pick different setups and different entry models. Okay, same entry models, okay, but at different points of intervals. Okay, so until our last one here, and I'll show you guys that last trade which I took yesterday, and the market actually smashed my target. So now we're going to scale down to our 1 hour time frame. All right, just to try to see. Okay, so we're going to scale down to our 1 hour time frame. All right, so the first thing we look for is what a change in market trend. All right, so that's the first thing you want to actually identify. All right, so now you have already identified that this market is bullish. Okay, so and you want to actually verify that. You don't want to actually dive into the market just like that, because if you do that, you're going to get burned. Okay, so you don't assume, you just follow the market, you follow what the market is actually showing you, and in order for you to make money from it. So right here now, let's see what happened here. We have a sweep of liquidity, guys. So we have our sweep of liquidity right here. Okay, so since we have our liquidity, that is showing what a change in what market trend. Okay, that is actually showing us possible reversals. So since we have a sweep of liquidity, what do we have here? We have a market structural shift, because that was the high before the market created this low. All right, now that was the high before the market created this low and actually what swept the early buyers, took the early buyers out of the market. So right here we have our market structure shift. So from here now we have actually the market taking out that high, and then we have this pullback. So right here we have an inducement level. Okay, we have our inducement level right here. We have 3 models that we trade. You don't have to actually use those three models. You can actually use anyone that actually suits you. So right now, what you do is you can go to the 30 minutes time frame and pick a breaker block. Okay, so you find your breaker block on the 30 minutes, the 15 minutes time frame, or the 5 minutes time frame, and you wait for the market to actually tap into that breaker block. So majority of the time, the market gives you confirmation. Sometimes it doesn't. And mind you guys, so let's go to the 30 minutes time frame and look for our breaker block so that we actually mark it and then optimize. Look how to actually optimize this trading setup. Okay, let's look for our breaker block. All right, so right here I can actually see a breaker block to the left. All right, so I have this breaker block right here. Okay, this is actually cool. A breaker block is what a failed order block. Okay, so we have our breaker block. All right, so that breaker block actually led the market to sweeping this low, but did not actually continue going to the downside. So right here, that's our breaker block. See how the market tapped into this area. Okay, you can actually go in. All right, you don't actually aim for the high. All right, why? Because the market moves in a fractal way. All right, it gives you high lows, and so on and so forth. So right now it gives you an opportunity after that big move. All right, so you can actually aim for that high. So that gives you a clean 1:8. So you can actually keep it for a clean 1:3 to give your a 1:5 to give your trade some room. So now what happens? All right, you continue to do this over time. So now what happens? We have a market structure shift. All right, now we have actually confirmed our trend. We have a breaker structure. So you continue like this. You just continue doing this. So the next thing you do is look for a breaker block. So there are many of them right here which I can see, so I can actually pick them from here. So I have one here, I have one here, so I'm just going to go ahead and mark that. So we have our breaker block here, we have a bearish order block, we have a failed bearish order block, which is our breaker block, same thing here. So now let's mark our inducement level right here. So this is our inducement level. Okay, so what is the inducement for? The purpose of the inducement is for it to be taken out. So now let's see, does the market actually come back? Sometimes it doesn't, sometimes it does. So let's see, the market did it come back. So right here you guys can clearly see how the market came back. Okay, the market came back to that set area. Okay, and even if you look here to the top right, the top left here, you can see that breaker block which you can see right there. Sometimes you just have to mark those levels precisely, and you just have, for this particular case, since we have too many, all right, we'll put our stop loss below the other one. This is how you put your stop loss. Okay, so right here you just adjust it. You see how the market came, it kissed it. All right, it kissed into it. So this one you just have a bigger stop loss. So right here you can clearly see what happens. It just takes a lot of patience sometimes. Okay, so your stop loss is going to be big for this. All right, why? Because there are so many of them, there are so many breaker blocks. Okay, so you still get a 1:6, which is a good risk to reward. So sometimes you can even get them midpoint. Okay, so you get them midpoint. All right, so the market has actually moved. All right, let's analyze this right here. So now, why did the market not come back here immediately? Why? Because looking at this chart here, all right, looking at this chart here, let me not complicate everything for you guys. Right here we have, there is another break of what structure right here. Okay, so since there's another break of structure right there, that means the market actually offers us what? An inducement level. Okay, so that means the market does what? Offers us what? An inducement level. Take note of that. So we have these key levels right here which the market pull back on. Okay, so we have this area and all these are inducement. Okay, so since that is actually happening and you have actually identified what the trend to be bullish, you can always trade like this. All right, so you can keep a pending order there. All right, this is your breaker block. okay, your breaker block. All right, so what happens is you can put your stop loss just there, just like that. So sometimes it will just kiss it, it will be, sometimes it's going to be exact. Now let's say this is, let's say okay, you're already in, okay. Now let's say your stop loss was just below, you'll be taken out, so you just have to give your stop loss room, probably 20 pips or so. So what happens, you just always, you're going to smash your TP. All right, so if you give your stop loss room, you're going to have a good 1:5, 1:6, and so on and so forth. So your stop loss doesn't have to be too tight. All right, so because you gave your stop loss room, like in this particular case, because looking at this area here, the market has actually triggered your entry. Okay, so it triggered, but you went a little bit in drawdown. So if your stop loss was just too tight, as you were taken out, so at least a standard stop loss of 20 pips would actually be good for this particular model. All right, so same thing, you keep doing the same thing over and over and over again. From you just follow the higher time frame, guys. You don't have to look at things from the lower time frame too much. Okay, so now let's look at another example. Let's look at another example right here. So for this, I'll decide to go to the hourly time frame. Okay, so now let's look at almost exactly the same thing happened here. Okay, so now we have the break of structure to the upside. Okay, so we have a break of structure to the upside. So a new high has been created, we have a new low. So since we have a new low, we have inducement level. So the market always creates inducement. All right, so those inducement level are actually liquidity zones where the market will actually come back to grab liquidity from and then dive straight to your breaker block. All right, so what I'm seeing here is actually funny, okay, but I can still mark it out. So this is my breaker block. Okay, so this is my breaker block. Let's try to see applying the 20 pip stop loss level. All right, sometimes the trade will take a lot of time, sometimes it will not. Let's try to apply the 20 pips stop loss level. So now you see 20 pips is actually standard, okay, but for gold actually comes with a confirmation always. Farm gold actually comes with a confirmation always. So this is how it works, fam. This strategy is actually super cool. All right, so this is it. All right, so you see, this is, you apply the 20 pip stop loss, you never get stopped out. All right, now let's look at the 4 hours. There's something I actually want to show you guys. So on the 4 hours, you see clearly that's all right, it's actually at the demand zone, and then guys, you smash your TP. So now there's one funny thing here, all right, which I'm going to show you guys. All right, so right here, this is actually funny, fam. All right, so right here we have a break of structure, right, because a new high has actually been formed. All right, so this is remember I told you that the market is still bullish till that high is taken out. So all you're going to do is to be looking for sell. If you try to for buys, if you try to look for sales, my friend, you'll be liquidated. So right here, you can clearly see that we have this breaker block right here. All right, so it can happen anywhere. It can happen anywhere. So on the 4 hours, we have this breaker block right here. We have this inducement level right here. So this is actually a good trade. So, but there's one thing I'm going to do on the smaller time frame. Okay, there's one thing I'm going to do on the smaller time frame. All right, these are inducement level. All right, so which is imbalance. All right, the market sweeps that inducement and then tap into our breaker block. All right, so what happens the moment the market taps into there? All right, remember your 20 pip stop loss level. 20 pips, 20 pips, 20 pips, 20 pips, 20 pips, 20 pips, 20 pips. All right, so 20 pips standard stop loss level. Okay, so you go for the 1:5, 1:6. You don't have to be greedy, farm. So you see, it will always play out, guys. The only time it will not play out is when you want to try to play around with your stop loss and try to be greedy. Okay, you want to leverage too much and then use a smaller stop loss. So you see, now even if let's say there's something I want to show you guys. Now, even if you have identified the whole thing like this, you can still redefine the trade. Now, let's look at that on the 15 minutes time frame. All right, so this strategy works perfectly well for gold. It also works perfectly well for Euro, Euro USD, and it works perfectly well for a lot of other pairs. So you see on the 15 minutes time frame, it doesn't actually make any sense. All right, so sometimes the setups are just like that. All right, on the 15 minutes time frame, it makes zero sense. Even on the 1 hour time frame, it makes zero sense. So that's why always a top-down analysis is always very, very important. You can't overlook that. So you see, we're able to see a very good setup, okay, on the 1 hour time frame. But looking at the 15 minutes time frame, on the 15 minutes time frame and the hourly time frame, we can't actually see anything. But the only thing I can actually make from here on this smaller time frame is simply this, and I'll show you guys another entry I spotted with the same model but continuing the trend. All right, so you must study to understand. All right, so right here, let's look at here. We have what a sweep of what liquidity. Okay, so since we have a sweep of liquidity right there, all right, we have a market structure shift right there. So that has actually validated something. Okay, and then now, sorry, we have a market structure shift right there. Okay, so that has actually validated something, and then here we have a pullback which provide our inducement level or our structural what liquidity. So we're just gonna go ahead and mark this out. All right, this actually happened Friday. The whole of this happened Friday last week, and yeah, so we have our inducement level. And then now we're just going to go ahead and mark our POI, which is our point of interest. The market did not actually get to that. So, but even if you adjust this, if you go to the 15 minutes time frame, you'll be able to maybe see a supply zone there that you'll be able to take that trade. So now let's say you took this trade here, or stop loss just here. So you can see now that you have been able to still make a very good decent trade. So we're using this same model, all right? So this model, this is it works, fam. It works. So all you have to do is just stay focused and then stay persistent and consistent with the model, and it will surely pay off. All you have to do is understand the model, understand the trend of the market. So now let's look at this. This is actually funny. All right. So now we have a high created. We have a low almost created a high, but the market actually swept that level. Okay. So since the market swept that level, we have what a liquidity sweep. Okay, which invariably we're having low. All right. So we have low equal lows right here. We have equal lows. So that tells us a story. And then here we have a market structure shift, which is cool. All right, so that gives us a market structure shift, which is cool. All right, following the smaller time frame. Okay, and then if the market takes that high, then we'll have a breakup structure. So we have a market structure shift on the smaller time frame. So now what are we going to do? We're going to scale down to the 30 minutes time frame and try to mark our breaker block and shifts like that. So now on the 30 minutes time frame, we can clearly see that we have that shift, and then all of this is our inducement. Okay, we can probably go to the 15 minutes time frame and be able to see an area where the market created that inducement probably. All right, so I can't see anything. All of this is still inducement to me. All right, so this is my inducement. Sometimes the smaller time frame doesn't make sense. All right, so I prefer to stay on the higher time frame. Sorry, yeah, so I prefer to stay on the smaller time frame, on the higher time frame. So right here, let's wait for the market to load. All right, so now we see that inducement, fam, and already let's say you have missed this entry, and then you are trying to enter. All right, you're trying to get a trade. So we have our breaker block right here. So I'm just going to go ahead and mark that breaker block. All right, so now what happens? You see what happens here? The market traded into this area, all right, and kaboom, to the upside, keeps exploding, and finally our overall target has actually been met. So now check how many trades you would have taken from here, and check how many profit, how many percent you would have actually made than holding one single trade per month. So it's actually better to actually have a system that actually works, and then knowing how to actually follow it. All right, dedicatedly focused and consistent. All right, because this strategy, if you show up every day, it will actually print on the market. So with the same strategy, I just want to show you guys something on gold. All right, for this week, let me just show you guys something on gold. All right, so I think the time is actually running up. All right, so now, mind you, gold is actually a very nice pair that offers square risk to reward ratio if you actually know what you're doing. All right, so now to actually understand this, all right, fam, you have to mark your low and then your high. All right, now let's look at the 4 hours to try to be able to understand the whole of that. All right, I'm just going to try to rush this a little bit, fam. All right, so now on gold, we have our low, we have our high, right? So we have low and the high. So now, where are we headed? We know we are headed up. The trend is actually up. Why? Because you can clearly see the structure of the market: high, low, high, low. So you're just seeing all of this is an uptrend, basically, fam. Is an uptrend. No two ways about it. So now you have identified the trend where we have the high of the market, we have the low. So all these are external liquidity points. All right. So since these are external liquidity points, we actually want to continue to ride this trend all the way up. So we are not looking for sales at any given point in time now. So right here, you can see now that let's look at something. All right, why is gold actually buying now? So let's look at simply from what I can deduce from the 4-hour time frame perspective is this. We have what? A break of structure right here. All right. Whatever happens here has already actually defined our trend. We have market structure shift and all. So right here, so like I was saying, right here we'll have a break of structure. Okay. So you guys can clearly see that we have a break of structure right there. So, and here this low, all right, this low is actually very important. Okay, we have a low, all right, and then we have a break of structure to the upside, or we can call that a market structure shift, whichever one that suits you best. Okay, here we have another break of structure. Okay, so these models, I've actually been explaining them over and over again, fam. So we have another break of structure right there, and that leaves us with what? An inducement. So what's the purpose of an inducement? The purpose is for it to actually be what? Be taken out. All right. So now we are just going to do what? Try to map out our breaker block together, fam. So now, fam, looking at the 4 hours, what can you actually identify as our breaker block? So I just want you to take a pause and look at the chart. So without wasting much of your time, this is what I identify as my breaker block. So you see how the market tapped into that area and just started kicking to the upside. All right. So now let's say you have actually missed here. The market presented a lot of other opportunities. So which it will always do. So now we scale down to the 1 hour time frame and try to actually understand the whole process. So on the smaller time frame, which is the 1 hour, also looking at the 1 hour time frame, you can clearly see the 1 hour breaker block. Okay, so now let's say you've actually missed this entry. What are you going to do? You're going to wait, fam, for this same process. It doesn't fail, fam. It doesn't fail. I'm telling you. All right, so you wait. What happens? What are you looking at? So you have what? A market structure shift or a break of structure, whichever you call it, fam. So we have what? A market structure shift right here. You can see that. All right. So now, what are you looking for? The next thing you're looking for is an inducement level, which was created right here. All right, so now let's look at this. We have our imbalance, which is our inducement level. And then we also have our break of structure, which is right there. Okay, we have our break of structure right there. So now, fam, all that being said and done, we're just going to go down to our 30 minutes time frame and then be able to pick our area of interest. All right, so now we have this. Sorry, I'm just going to pull this back a bit. We have this breaker block right here. Kaboom! What happened? Market just steps into it, and then kaboom to the upside. All right. Let's say you end. Like I said, you don't always have to go for the full swing, guys, because sometimes that can be very, very hectic. All right. Now you can even go to the smaller time frame, like the 5 minutes, and redesign this whole thing. All right. So it works always. Now let's go to the 5 minutes time frame. All right. I'll show you some guys something clean, plain, and simple. And it is something you can actually replicate each and every day in this market space. So now, let's say with all of that, and then you feel that you don't want to actually spend too much on the market, what are you going to do? All right. So right here, you can actually still redefine the whole thing. We have a sweep of liquidity, market structure shift. All right. First, we have a sweep. Yeah. We have a market structure shift right there. All right, so we have our inducement level, okay, which is cool. Now, what I can't actually pick out here is a breaker block. So, but then this is well redefined enough. All right, so what happens? Kaboom, you're in. All right, your stop loss just below the structure of, sorry guys, so your stop loss just below the structure of those candles. So you're risking a 16 pips for 1,000 plus pips. What happens? It doesn't waste time. It doesn't what? Waste time. 400 pips. Yeah, that's crazy, guys. Isn't that crazy? So you see, you can go back to your hourly time frame and look at the whole thing. This is actually crazy. This is insane fun. So you see, very, very simple stuff, and it is easy to replicate. So now I'm going to show you guys something. Now we have what? Another break of structure. Okay. We have another break of structure which offers us what? Another opportunity. With every break of structure comes what? Another opportunity to make money from the market if you're patient enough. So now we go down to the 15 minutes time frame. All right, we're just going to go ahead and just mark some certain things, some few things. All right, so now I'm just going to take this down a little bit. So where is my inducement and where is my breaker block? All right, so here is my inducement level. All right, because this one is close to my breaker block, which I'm going to mark. All right, sometimes the breaker block doesn't come so perfect, and guys, it doesn't come so perfect, but it will always show itself. So we have our imbalance right here, and then we have our breaker block right there. So what happens? Kaboom! Creates another breaker structure. It still repeats the same thing over and over and over again, fam. So now I want you guys to do the rest of this on your own. So now what happens? All right, so you see, let's say you put a pending order here. Stop loss can just be probably like 20 pips or 30 pips and most, because gold, you just have to give it a lot of room. So what happens? Boom, you're out with 1:10, which is the reward ratio. So now let's look at another one again right here. All right, that high was not taken out. Still, your goal is for that high to be taken out. All right, so now whatever happens, your mind should just be made up in a way. We have market structure shift. All right, we have our market structure shift. All right, market structure shift. All right, so we have our inducement level, right? So we have a break of structure. Bam. So all this is put in place, guys. I just want to end the session here. All right, but lastly, I think I will show you guys what actually happened today. This last setup for today. All right, so this is it. We have our breakup structure. All right, so we have our imbalance right here. So now, where's our breakup block? Right here. And then if it doesn't feel well enough, you can still redefine it. So you see your breakup block, what happens? The market taps into it and gives you the confirmation you need. And what happens? You take the trade all the way to your take profit target. So what happened? This is a very clean 1:10 risk to reward ratio. And what happened this morning? So right here, you can clearly see that we have a breakup structure right here. This I'm talking about today. All right, I'm talking about today, not any other day. Today, we have a breakup structure. All right. So since we have a breakup structure, we're going to mark our inducement level. So this is our inducement level. We want the market to actually come back to that area, and then you take your trade, your buy trade. So where's our breakup block? Right here. You see, that's our breakup block. All right. Sometimes you wait for confirmation. Sometimes you don't, because sometimes you're not gonna get it. All right. So what happens? What happens? All right. Sometimes you get a stop loss. All right. So what happens? You see, trade smash TP. Now let's look at the 5 minutes time frame. All right. Okay. On the 5 minutes time frame, we got the confirmation. Yeah. A majority of the times, the 5 minutes time frame you use for confirmation. Now look at this 5 minutes time frame confirmation. All right, so you see, I use 5 minutes for confirmation. See confirmation here. So 5 minutes still for confirmation. All right, 5 minutes closes, gives you the go ahead. Just go for good risk to reward ratio trade. So don't forget to hit the like button, fam. Subscribe to this YouTube channel for more and more videos like this. Stay blessed, fam.